If you're good at saving consistently, more likely than not, you have a good amount of cash in the bank. And banks love the fact that you don't know what they are doing with the money that you're putting there. Well, actually, two things that you don't know. First, banks are not required to keep your money liquid on hand. So if you have 100 grand in your bank, they are not required to have that 100K in the vault at any given moment. Second thing is a major way that they use the money that you put into the bank is they actually use that to purchase life insurance. If you're curious about whether or not your bank does this, here are the banks with the most amount of money in life insurance. But what banks are purchasing are not regular life insurance policies. Banks are purchasing custom designed cash value life insurance policies. This allows them to do three major things. Biggest thing is it allows them to use tax laws to their advantage. Most people do not know that life insurance is one of the few places that you can grow your money, and the IRS, the state, and the city cannot tax that money. So it's another way for corporations like banks to pay less taxes. Benefit number two, interest in custom designed cash value policies is not the same as the bank. It is going to be higher than what you're going to get in a bank account. Third, life insurance companies, unlike banks, are actually required to be liquid. They need to be able to have the funds to pay out the policies that are on hand. So while the 250K guarantee in banks is nice, life insurance companies are required to pay out regardless of how big your policy is, which means that they are required to have liquidity, unlike the banks. If you go back to the list of banks that have money in life insurance, some of these banks have billions in dollars of life insurance, and there is no bank where they could put billions of dollars and have that money guaranteed. And the biggest unlock, which makes this make sense for most people, is that when you have a policy that is a custom designed cash value policy, not only do you have life insurance, you also have a little bank that's attached to that. So whether you have 100,000, 2 million, 3 million, or even a billion that's in that account, you are actually able to take those funds out of that account at any time without having to get any kind of approval from the life insurance company. So if you take a step back and think about this, you're putting money into the bank. They're taking that money and opening up life insurance policies where they're able to take money out and lend that money back to you. And by the way, when they take that money out, they're actually still getting their full interest on that money as if it never left. So not only are they getting interest from the insurance company, they're also making money off of you from credit cards, car loans, mortgages, all kinds of things, which is actually a bit genius on the part of the banks. Now, the good news is that because this is life insurance requires a human body to be insured. So this strategy is not only available to banks, it's available to you as well. So essentially, if you want to, you can cut out the middleman, which is the bank, and you can create your own bank. If you're already saving consistently, this becomes super easy and a no-brainer for most people once they understand what the numbers look like. Here's an example with a 40-year-old male putting $12,000 a year in an accelerator policy. This is a custom designed cash value policy where you're committing to put in a consistent amount over a 10-year period, and after that, you just stop. The total into this policy would be $115,000. With this type of policy, there's the insurance amount, and then there's also the mini bank that's attached to it, where you can use that the same way that the banks use your money currently. So the insurance amount for this at the beginning is $370,000 for that $12,000 a year. I'm hosting a workshop. I'll go into more detail on creating this personal bank for yourself. Go ahead and comment workshop in the comments if you would like to join that. But I'm going to go over some key highlights right now on what that 115K will do for this gentleman. The way that this works is that with each policy payment, part of the funds go towards paying for the life insurance, then part of the funds go into this personal bank, and then interest is credited to the funds in that personal bank based on how well the stock market is doing. That's how you end up with higher interest rates as opposed to in a bank. So by year 5 of putting $12,000 a year towards this policy, I want to just caveat that these are projections because the real life numbers would depend on what the stock market is doing. But at year 5, the projection is about $48,000 in that personal bank. At year 10, there would be about $123,000 in this personal bank, right? So remember, the total put in thus far is $115,000. Nothing else would be going into this policy at all. At year 10, there's $123K and that $370,000 life insurance attached to it. So if they were to pass away, they will still have that life insurance that would pay out. Now, if this 115K had just been placed in the bank, there would be that money in the bank and that would be fine. But if this person passes away, then that's all that's being left behind, the 150K, and that's it. In this policy, there's the access to the funds and also the life insurance policy. But more importantly, when you take money out of a bank, right, if you have the 115K and you take out $50,000 to go work on your new business, that 50K is taken off of your total, and all that's left in your bank is, I gotta do some math, I can't do that in my head, right? 115 minus 50, what would be left in your account is $65,000. Whereas if you take that 50,000 out of this policy instead, even though you take out that $50,000 to go start your business, the amount that's going to continue to get interest is $115,000. And you have the option to put that 50K back whenever you want to or not. It's up to you. Also depends on what your use case is for the policy, whether or not you should actually put those funds back. So now let's see what the projection is for these funds. Again, he's only put in $115,000 into this policy and not putting anything else at all. By age 65, just based on interest growing in this account, the funds available would be $342,000. Essentially, the money has doubled, and don't forget, there is still the life insurance policy that is attached to this, which at this point has gone up to $411,000. This $342K can be left to continue to grow, can be taken out as a supplemental retirement income, can be taken out to go buy a vacation home in Florida, can be taken out to go buy a vacation house in the Dominican Republic, right? There are no limits to what these funds can be used for. But more importantly, I'm going to ask you a question. If that $115,000 had just been left in a bank account, is there any kind of possibility that it would grow to $342K? Let me know in the comments what your thoughts are. All right, let's fast forward to age 80 and see what that looks like. So age 80, again, just 115K has been put in and that's it. And at this point, the projection for that personal bank is $962,000. Again, from 115 to 962, doing nothing besides just leaving the money in this policy. And at this point, the insurance payout has gone to a little over $1 million. Again, nothing has been put into this policy besides at 115K. I'm going to share what the numbers look like at age 99, but if you put in 150K into life insurance and you just stop, and that grows to $960,000 of cash you can access, and you have $1 million policy, is that a good deal? Is that worth sacrificing 10 years and $12K a year for you in exchange to have the possibility of having almost $1 million of access to cash later down the line? Let me know what your thoughts are in the comments. Now, these types of policies are in effect all the way to age 120. So if you have super great genes in your family and you guys live really, really long, your policy will be intact all the way till 120. But I'm going to show what the numbers look like at age 99. Again, the total amount put into this policy is $115,000, 115K, period. And by age 99, the projection of cash available to take out of this policy is $3.4 million. That's just the power of interest and the power of time and the power of patience and using the same strategies the banks are using with your own money, but using it to your advantage instead. And at that point, the insurance payout has also gone up from that initial 370K to that 3.4 million as well. Now, while these policies can do amazing things, I create these for my clients every single day. I have a policy like this as well myself. They absolutely are not for everybody, and there are a few things that you want to take into consideration before even looking into getting one of these. Go ahead and watch this video to find out what those things are so you can be sure that this is actually a good fit for you before you waste your time, energy, and potentially money getting started into this. I will see you there.